Let's analyze together First Republic Bank.
Yeah, let's go with this stock. This is not the common one that we analyze, but we had to analyze this. Look at this chart. We're in the weekly time frame. This is completely insane. We had an uptrend from 2011 of more than 1000%. Nice. The things that you expect with some stocks in the US market. But then we had this huge correction of more than 90%. We go to the lower part, even 92%. We didn't expect something like this, but the market always surprises you, so you have to be prepared. That's why we always insist on technical analysis and risk management.
Yeah, and some investors may say, investing on crypto is very risky. And now you see this is like, I don't think so. Everything can be risky right here.
Yeah, yeah, that's the thing. It's not that cryptos aren't risky; it's that everything in the market is risky, and you have to know what you are doing and act accordingly. So right here we have some scenarios that could happen in the future. We don't know them, but we can analyze and apply technical analysis. Let's go to the 1 hour chart. We can clearly see that the price bounced from that level with a lot of strength. Maybe because that was the level of 2011. A lot of people were waiting for an opportunity like this. But we don't have to forget that in the past, a lot of stocks have similar scenarios and they didn't bounce a lot. At the end, they crashed or they went lower again.
Yeah, I perfectly remember the rebound, the dead cat rebound of Credit Suisse. It wasn't like it was very similar to this one. And actually, what I say is like when you see a rebound like this of more than 200%, I don't think it's worth it. Especially when you see a breakout right here of the uptrend. It's like now it's losing momentum, and we could perfectly visit the 19 levels again.
Yeah, the thing right here is we are just stating our opinion as usual, but what we recommend is to apply technical analysis and follow it in order to have like the risk in a way, managed risk. Because if you don't practice this, you could get completely trapped. Because look at this gap. Imagine that you bought right here at $75 on March 11th. Then you will be like, let's say the exact percentage, but I think this is a lot. Yeah, minus 60% from one day to another. And you couldn't even close your positions and your stop loss would be like jumped. So they wouldn't work. This is why we always insist on knowing the risk, the real risk involved. And with this kind of assets, this kind of volatility, we are talking about minus 60% in a couple of days. This is nuts. If you don't know what you're doing, don't trade it.
And remember, when you go to the weekly chart and you see this upturn of more than 1000%, it took a lot of time to get there. And the long-term investors are the ones that are pushing the price to get this $200 per share. But right now, I don't think they're buying this, especially when maybe this stock is, suffering a crisis, a bank crisis. So it's very risky, there's a lot of risk involved. So people with millions of dollars, I don't think they're thinking about buying this stock right now.
Yeah, the thing is like they have the dividend yield of 3.46%. We have to see if they maintain it this year.
I don't think so.
And we have to see
But this
that,
is my opinion,
Yeah, everything right here is our opinion. That's true. And let us know in the comments your thoughts also. We want to learn from them, and we always learn new things. But we can see that the results, at least for now, hadn't been that bad. So maybe they can recover, and that dividend yield is something interesting to have into account. But this is something that you have to analyze with a lot of care because, as you mentioned, Credit Suisse, it seemed like the price was going to bounce from there. A lot of people were buying, and at the end, the price continued to go lower and lower. Maybe in 10 years from now, the price recovered and we had that upturn of 1000% again. But you don't want to be inside of it with a lot of losses and then recovering. You want to enter at the best possible moment.
Yeah, and you may think, okay, maybe is the best moment to invest into this particular stock. Okay, take a look at Credit Suisse and take a look at what happened there. It's not making new highs. It's making new lows. So this is the risk that we are talking about when you buy a bank that is suffering, experiencing losses. We don't have here a losing quarter yet, but if it happens, you're gonna see that reflected in the price.
Yeah, so keep tuned with that news. Subscribe to our channel also to see next analysis, and remember to apply risk management and trading strategies in order to save your accounts, because you don't want to blow your account as we did in the past. That's why we share with you to learn all together.
Yeah, exactly. You
welcome.
can have like 30 stocks and it's better than one. Definitely. Thank you very much, guys, and see you in the next video.